and comprehensive outline that has been our reporter Peter Theory just walking us through some of the things you need to know when it comes to the history of troubled banks. And we are now joined by David Mategwa to help shape the conversation around Sacco reforms in the country, as well as give us insights on matters money management as we head into the festive season. Welcome, sir, and a pleasure to have you in studio with us this afternoon. And of course, just picking off from my colleague, what comes to mind when you see Kenyan banks going under? And of course, you lead one of the largest Saccos in the country, that is the Kenya Police Sacco.
Thank you so much, Akina. It's my privilege to be here today. What I could say about this is that what is happening when you have an opportunity to run an institution, the first thing that people have to look at is about governance. It's very important in terms of management, because if you have not put good structures of governance, then you get those loopholes, the internal controls, you find yourself in that position. Interesting. Yeah.
And just building up on that, Mr. Mategwa, of course, the Saccos have played a critical role in terms of giving alternative financing in the country, and of course, Kenya being one of the robust economies within East Africa. How would you rate the growth of Saccos in Kenya, and where are the opportunities likely further to come out from?
Yes, I can rate 1 to 10 Saccos, the growth. I think I can give them 8% out of 10. We have realized that even...
Aren't you being too generous?
No, you will understand where I'm coming from.
Okay.
Because if you look at when we had a problem, when we had the pandemic in 2020, some of the Saccos, majority of the Saccos, performed better than 2019. And if you look at now this year, 2021, when the country now is opening up, people have been allowed now to move. People are doing business. We have seen growth in terms of giving out loans, in terms of growth in total assets. We have seen the deposits growing in the Sacco industry. And this, I say, we all owe this to the government of Kenya, because for coming up with the regulations and rules that guide the Saccos. And you know, the Sacco model, the corporate model, is very unique. It's not like the other financial institutions, because this is a model that people come together, they own it, they run it, they elect one of their leaders, they trust you. So it's different, and whatever you get, you share among yourselves in terms of dividend. You retain the capital and continue doing that.
All right.
Yes.
And in your assessment, would you say our savings culture as a country has improved? And are people taking up Sacco products, or is it the same old, where people prefer to put their money under the mattress?
I think with the information, with the way the banks, the Saccos now are now talking, you know, some years back, the Saccos are doing a lot in this country. They are playing a very big role in this economy, but they are not giving the stories. But now Saccos have come up. They are now talking about what they are doing. And we have seen in terms of membership, people are now running to the Saccos, joining. I can tell you from my Sacco, we have seen even the deposits increasing. For example, last year, 2020, November, if I compare the deposits that we had, they were 21 billion. As now, we are talking of 23 billion. The loans that we had last year, November, end of November, was 31 billion, our loan book. Now we are talking of that 6. We have increased to 5 billion. So I think the public have realized that Saccos is where, and it's very rare to hear Sacco has gone down. I think if you take maybe for years, I think you'll count, it's not even a percentage, and if there's any that has gone down.
All right.
Yes.
And from where you sit, what is the outlook for the Sacco industry, especially now that you're seeing a more financial conscious population that is keen on getting on board and tapping into financial products?
What is happening that, like today, I've just come from Masai Mara, where we had the national cooperative policy, which has been taken through. That is a bill that is going to Parliament. I realize that the strategies that are being put in place, I think in the years to come, the Saccos will be where people will be taking their money. And we have seen also the regulator and the Saccos coming up with a complicated digital platform. You see some Saccos now are on core banking, very intelligent software. So we are looking at the growth of Saccos. I think in the 5 years to come, I think we will increase the membership of the numbers of people who have joined Saccos in this country.
And you've been credited as one of the trailblazers when it comes to running one of the profitable Saccos in the country. Perhaps talk to us about how you are leveraging on technology, and some Saccos are still struggling, working on, is it wise to invest in that path, and others are still waiting to see what the industry has to offer?
I think, again, to be honest, Saccos that are not embracing technology, I think I can just, I'm not a prophet of doom, but they might not be there in the next 5 years. The Saccos that have embraced technology and invested in technology, they are the only Saccos that will survive. And they are the Saccos that will be profitable, and the members will really enjoy and improve their financial well-being. So if you look at Kenya Police Sacco, we implemented a new software. We call banking last year, and we did it virtually.
How much did it cost? It
cost us 500 million. It's not little money.
It's not pocket change, yes.
But if you look at the value of what we are getting, then 500 million is less compared to what we are getting, the value we are getting from that, the business. Members are able to access wherever they are on phone, they take loans, you know. If you don't do that, then you lose your members to other digital platforms.
All right.
Yes.
And speaking about digital platforms, we have the digital lenders.
Yes.
Who recently were put in a tight spot, yes, where they will be now regulated under the central bank.
Yes.
And I can see you smiling, an indication that it's something you were waiting for as an industry, because some of the lenders had taken on a loan shark approach in terms of lending to members, and this ended up hurting some of the borrowers in the country. And just looking at the broader scheme of things, Mr. Mategua, we have a challenge on default rates, especially where it is becoming an apparent concern. If you look at the non-performing loans in the banking industry, they've actually gone up. And for the Saccos, what are you doing in regards to taming default cases?
Okay, you know, as I said before, that the Sacco sector is a unique model of doing business. If you look at, in the case of the police Sacco, our percentage, our delinquency ratio is 1.8%, and the industry is 5%, so we are doing well. You see, now, these are our members, so when they default, they'll still come back to us when they need more money, because they have defaulted these small loans, and they need a big loan. And these are our members, and they're the owners of the Sacco. So we will make sure that we clear the small loans, and that is why we are reducing even the ratio, the percentage.
Okay.
Yes.
And speaking about the ratio, I want to get your reaction to the digital lenders, because it would be unfair for me to not allow you to chip in on this.
Yes, I think that's a fair play. You know, if you join a game, then it should be, everybody should be on the same platform. If it is a regulation, everybody should be regulated. So for us, I think it is a good thing for us also, because that's a fair play for when we see we are giving out, we are regulated, and they are not. So, and they're playing, and they're getting even our members, because when they send messages, they don't know the person they are sending to. They are sending the people they are sending. They are members of Saccos, and they find themselves picking those loans and defaulting. Yes.
All right.
Yeah.
With an asset base of over 20 billion shillings, Mr. Mategwa, the police Sacco is literally primed for acquisition. If you look at the banks that have recently taken on mergers with some of the Saccos, some banks are buying into microfinance outlets. Perhaps, what is the future of the Sacco?
Okay. Then let me first correct. By the end of this year, hopefully, we will be 45 billion total assets. And since we are celebrating 50 years next year, we are going to be 50 billion at the end of 2022. If we look at the mergers and among Saccos, then that's where it will happen. This has been happening globally. We have seen mergers in the US. They are going on even now. The bigger the Sacco, the more they'll merge the smaller Saccos, because they will not afford to acquire technology like the same way the bigger Saccos are acquiring. So I think for merging, it will happen.
Something you would be happy to consider?
Yes,
okay.
yes. We will consider if there is a Sacco that wants to merge with the police Sacco, we will have a conversation over it.
So finally, of course, there are the regulations that SASRA had set up. And just walk us through, are you compliant, and what does it mean for the small Saccos in less than 30 seconds?
Thank you. I think the regulator has put ratios that Saccos have to meet. In our case, we have met, and we are above the regulator's expectations, because we went that and we have seen the benefit. It is not about the regulator. It's about now us doing business and having the institution financially healthy.
All right.
Yes.
Thank you, sir. We appreciate your time.
Thank you so much.
Always a pleasure having